Hi everybody, I'm in Manhattan, and tomorrow we're looking forward to the BP results. Not particularly looking forward to them at all actually, but we'll be interested to follow the BP results. And that's, I was just on Bloomberg TV talking about it, and the expectation is going to be a bit challenged. The reality is the oil price was pretty good in Q2, $75 a barrel. It was obviously a significant downside from the previous year's 2Q, but 75 is a good price. Keep in mind that, for example, BP sets its buyback outlook, which I think is $4 billion for this year, at $60 oil. So in theory, the BP buyback should be running pretty hard here if we just did a $75 quarter. The problem is, of course, the US natural gas price hasn't cooperated and was low for the quarter at about $2.50 and remains low actually. We like the natural gas stocks and the long-term play on natural gas, but we have no confidence in the commodity right here. It's kind of been super hot. Everything's been going the right way for Natty, and it just can't get out of its own way. The main obvious tightening that you'll see is going to be the rig count falling, which is happening rapidly. But that really, to us, we've been arguing is spare capacity in natural gas, and you've got to watch out for that. Having said that, for some of the big names, an AR or an EQT, you've got to love the long-term inventory and the long-term mega theme. Anyway, I got completely off track regarding BP, but the point is that BP, by some measures, is the biggest natural gas producer in the US, and so the results have been challenged. And there's two elements of interest. How much buyback are they going to say they're going to do? What tenor, i.e. are they going to continue it through Q4, keeping in mind that Chevron, Exxon, Shell all reiterated their buyback plans, which are big. So we'll see from BP. And of course, the second thing, which is very interesting, is what Bernard Looney says about BP's strategy, which I was excurating, whatever the word is, in my note yesterday about bad BP strategy's been for how long. Safety problems, flip-flopping, just going every which way, culminating in the worst single year I've seen for a single company strategy, ex the Macondo accident, which was BP in 2020 calling peak oil, calling the end of their own oil and gas production in favor of 6 to 8% return renewables. I mean, it was an absolute shambles, and they basically cut the dividend as well. You couldn't have screwed it up worse. And for BP now to be backing off is interesting and necessary. We think they should just go in all in for what people like them for, which is a major oil and gas company, which is very cheap, and forget all this, whatever they call it, transformational growth energy, TGE is the BP word for that stuff. Anyway, that's enough about BP. Elsewhere, we've also got tricky results coming from the likes of Devon, Pioneer and EOG, not least because we call them stealth natural gas companies, but also because they're going to have to cut their variable dividend in some way, shape or form. Now, I do think that they may surprise operationally, but we'll see, and that's a risk. But the main one is they're going to have to cut the specials and give new guidance, which is going to be tricky for them. We'll see how that works out. And of course, a lot of this depends on the oil price, which has been very lively. I think initially helped by the dollar, although the dollar's a headwind at the moment as it's weakening. But recently, a major weakening in the dollar was I think a big upside to oil prices, and that's been part of what got us up so rapidly from essentially 75 to 85, which, as I mentioned, 75 was Q2's average. So Q3 is shaping up well with very strong refining, and we got refining wrong actually. We thought refining would weaken more than it has. I think outages are the particular reason, namely heat-related outages in the Texas Gulf Coast complex have been, I think, very supportive for margins because we're not buyers particularly of strong demand here at all. We think China's got issues. We think that the US demand is looking weak, not even in gasoline actually, but particularly in diesel, which is a rolling disaster area, not to mention high propane stocks. So what are we doing? Well, we're running the stocks here into Labor Day. You don't find the oil price when it wants to go up, and it feels like it wants to go up. Positioning is still not crazy bullish or anything like that. So we can see oil running, and with that, the stock's running. Additionally, as I highlighted yesterday in my note, there's terrific pressure on pump prices right now. Gasoline pump prices are due really to go up another 20%, or at least, over 10% at least, based on the move that we've seen in wholesale gasoline prices on the Gulf and in WTI and Brent. So that should reignite the inflation fear, which could be positive oil, negative the market. So that's one very much to look out for. Is gasoline higher prices enough to really push the entire inflation needle? Shelter, as you know, is way more important. We do think that shelter should start crumbling here, although having said that, I was looking at Manhattan rents. This is Manhattan over here, and they're sky high. They really are. They've got to convert some of these office buildings to offices. That's what they've got to do. This is a Coast Guard vessel which is here for a trip to show off the Coast Guard training vessel, actually built by the Nazis. The guy just told me. Brooklyn Bridge. We've had a little interesting time this week for talking about female executives and Irish women, strangely enough. The feminist comment I'll make is that the Brooklyn Bridge first engineer, Roebling, died in an accident shortly after construction started, and his daughter, Emily Roebling, took over as chief engineer and was chief engineer of the entire project, and in fact was the first person to ceremonially cross the bridge in 1860 when it opened. And it remains, to me, one of the wonders of the modern world, actually, the Brooklyn Bridge, which really was the resulted in the combination of Manhattan and Brooklyn into a bigger New York. Brooklyn itself was once, pre-Brooklyn Bridge, was an independent city and the first suburb where I live, because the city fed New York from Brooklyn Heights. I'm going off here, aren't I? But what was I saying? Yeah, the point that we were making about Irish women and female executives was just interesting. That I was on an analyst call this morning with ExxonMobil's CEO, Kathy Mickles, who's an external appointee from Diageo, a very impressive woman, actually. Equally, we now have two Irish women, one at Shell and one at Chevron as CFOs. We just had a new CFO appointed at Chevron, who's an Irish woman. So it's quite interesting to me, basically, that you have these senior executives that are women. And I just completely wandered off, but I'm going to leave